Welcome to this quick guide on bonds, an essential investment tool that can bring security and stability to your financial journey. If you're looking for ways to build wealth without taking on too much risk, bonds might be the perfect solution. What are bonds? Bonds are like a loan. When you buy a bond, you're lending money to an organization, such as a government or company, in exchange for regular interest payments and the return of your money after a set period. How bonds work. Here's how bonds work. First, you lend your money by buying a bond. In return, the issuer, whether it's a government or a business, agrees to pay you regular interest. When the bond reaches its maturity date, you get your original investment back. Bonds aren't risk-free. They come with interest rate risk. If rates rise, bond values can fall. There's also credit risk, the chance that the issuer can't pay you back. And don't forget inflation risk, which can reduce the purchasing power of your returns. Bond investing tips. Here are some tips for investing in bonds. 1. Research the issuer's credit rating to ensure they're reliable. 2. Choose bonds that align with your financial goals, whether for short-term stability or long-term income. 3. Diversify across bond types and maturities to spread your risk. Overcoming common challenges. Feeling confused by financial jargon? Don't worry. Bonds might seem complex at first, but with the right resources, you can make informed decisions and feel confident in your investment journey.